Hey everyone, welcome back to Corporate Decoder, the place where we, decode corporations. Today, we're diving into the annual report of a company that might make you hungry, so make sure you have a snack ready. We're talking about Portillo's, that Chicago-style street food chain with a cult following. Get ready, because even though they're known for their delicious chocolate cake, this report has some layers that are not so sweet. First things first, the report is filled with forward-looking statements. That's basically corporate speak for we're making predictions about the future, but things could change. The company warns about everything from food safety scares to economic downturns and supply chain problems that could make it difficult to get food to their restaurants. But one of the risks that they specifically mention is that team members may seek to be represented by labor unions in the future, but more on that later. So what exactly is Portillo's? Founded back in 1963, they've grown from a small hot dog stand to a chain with locations across 10 states. They're famous for Chicago-style hot dogs, Italian beef sandwiches, and their signature chocolate cake shake, and are aiming to be a dining experience like no other. They call it an exciting, energy-filled atmosphere, which is probably true, and many restaurants come with double-lane drive-thrus to quickly and efficiently serve their guests. As of the end of 2024, they had 94 restaurants, and the company owned 85.6% of Portillo's OpCo, with the other members owning the remaining 14.4%. They've got a four-pillar strategy focused on operations, innovation, building new restaurants, and taking care of their teams. Speaking of teams, Portillo's has a big focus on their employees, calling them the heart of Portillo's. They're trying to create a positive work environment with good rewards, career development, and technology to keep employees engaged. They say they are committed to living their values of family, greatness, energy, and fun in every Portillo's team member. Growth is the name of the game, with a goal to increase their number of restaurants by about 12% to 15% each year. They're focusing on expanding outside of Chicago, particularly in the Sun Belt states like Arizona, Texas, and Florida, but they are also targeting Georgia, Colorado, Nevada, North Carolina, and South Carolina. Based on their own internal analysis, they believe they could eventually have over 900 restaurants in the United States. Currently, they are projecting 800 to be full-scale restaurants and 100 to be smaller pickup models. Of course, they're up against some tough competition in the restaurant world. They're battling it out with quick service and fast casual places, as well as full-service restaurants. The restaurant industry is always changing based on what people want, the economy, and even the weather. Now, let's get back to those potential labor unions. This has been an ongoing issue, and some of their employees have already voted to be represented by a union, although it appears the company has not received other petitions to unionize. If a significant number of employees unionized, it could have a negative financial impact to the company. So, the possibility of unionization seems to be something that is on the company's mind as a possible risk. Cybersecurity is also a risk for the company. Portillo's is investing heavily in digital and delivery services, which means they're handling a lot of customer data. They are trying to protect this information, but cyber attacks happen, and a major data breach could hurt their business. They also note that it can be difficult to comply with regulations at the federal and state level. The company also acknowledges they have a pretty high level of debt, which is another major risk they have identified. This could make it harder to borrow money in the future or react to economic changes. Another thing to consider is that Berkshire Partners is their biggest shareholder, and they might have interests that don't line up with the company's or smaller investors' interests. They have an interest in pursuing acquisitions, divestitures, and other transactions that could enhance its investment in the company. Here's a fun one, the Tax Receivable Agreement, or TRA. It sounds complicated, but it means Portillo's has to make payments to certain pre-IPO members, and those payments could be pretty big. If things change, like a change in control of the company, those payments could even be accelerated, which would really change the financials of the company and eat into profits. Alright, let's check out some numbers. Total revenue increased about 4.5% to $710.6 million. Same restaurant sales, meaning sales at stores that have been open for a while, however, decreased a little by 0.6%. On the other hand, net income increased, as well, as $10.3 million to $35.1 million. Food costs also increased, mainly because of new restaurants and higher commodity prices for ingredients. Labor costs also went up because they're hiring more people and investing in their employees. General and administrative expenses actually went down a bit, mostly because of lower compensation expenses. However, this was partially offset by an increase in advertising costs. For 2025, Portillo's is aiming for 11% to 12% revenue growth and a little bit of growth in same-restaurant sales as well. They're expecting commodity costs to stay about the same, however they are estimating 3% to 4% wage inflation, with additional wage investments. So expect menu prices to continue to increase in the near future to offset those increases. During 2024, they opened 10 new restaurants in places like Texas, Arizona, and Michigan, with a focus on the restaurant of the future design to make sure build costs stay manageable. The company's payment obligations under the Tax Receivable Agreement (TRA) may be significant. The company estimated that the tax savings associated with all tax attributes would be at $381.9 million, with payments to certain shareholders equaling $324.6 million. The estimate was based in part on the timing of redemptions or exchanges by the pre-IPO LLC members and was projected over almost 50 years. Taking a turn to risk management, it sounds like Portillo's really depends on their third-party service providers. If these third-party service providers are impacted by a cyber attack, it may disrupt Portillo's ability to interact and transact with guests. If that were the case, the company's results could be materially and adversely affected. It's interesting to note that Ann Bordelon, chair of the audit committee, Paulette Dodson, and Noah Glass all have cybersecurity risk management experience. It might be useful to have these directors given the company's focus on technology and digital investments. Finally, there's some legal stuff about where you can sue the company, but it doesn't seem especially relevant to the business. So what's the story here? Portillo's is working hard to grow, but faces some challenges. On the plus side, they're expanding into new markets and innovating with new restaurant designs. Plus, they seem to have a good handle on managing their supply chain, but they're not without issues. Labor costs are a concern, as is potential unionization. Debt levels are high. The company seems to be depending quite heavily on things going smoothly with those third-party providers. Overall, the company is doing well, but there are some significant risks that investors will need to be aware of going forward. They are aiming to double down on growth while managing costs, and that's a tightrope that can be difficult to walk. Thanks for watching. If you enjoyed this deep dive into the Portillo's annual report, be sure to like, subscribe, and let me know what company you'd like me to decode next. And if you're near a Portillo's, maybe grab a cake shake for me, for research.